first of all, in the big picture, it appears to me that we are coming to the end of the fiat currency system. And the transition of that to something else will definitely require far higher gold prices, because what higher gold prices are in effect lower purchasing power for fiat currencies. Fiat currencies are dying. So the easiest prediction in the world is to say that reflected in the price of gold, gold will be considerably higher without putting any numbers on it. There is also, when you look at timing, something which means that Naomi could well be right. And in fact, she may underestimate the situation. And that is that we have an enormous credit bubble. Now, if you don't know that we're in a credit bubble, just look at the debt. We're in a debt bubble. The other side of debt is credit. Now, if that goes pop, then all bets on currencies are effectively off. The problem is that when that goes pop, you've got to consider what the establishment, and by the establishment, I mean the government and its central banks, will do. They will try and rescue the banking system, large corporations, the entire derivative system. And the only way in which they can do that is to replace imploding credit in the private sector with rapidly increasing credit in the public sector, which basically means diluting the purchasing power of currencies. So with that in prospect, not only will you find the dilution of the currencies, but also a loss of faith in them. It is quite likely that the purchasing power of gold, which remains constant, will be reflected in, if you like, its value in declining paper currencies, quite dramatically shifting. We could see Naomi's forecasts easily exceeded if that bubble pops. And the thing that is likely to pop it is rising yields along, rising bond yields, government bond yields along the yield curve. So you can see that we've got a bond crisis in the background. And as yields rise, that is bound to burst the credit bubble.